Good afternoon, everyone. Welcome back to the Pathways Financial Literacy Workshop in partnership with UHD's Financial Coaching and Economic Stability Lab with our community partner, Prosperity Bank. We have Rudy Reyes today. We're going to be talking about investments and a little bit of credit. We're going to be talking about a little bit of both. Rudy, go ahead and take it away.
And good morning. Thank you, Tan, for having us and Prosperity Bank present for the U of H downtown students. We are excited to be a partner with you again this year as last year, and look forward to 2022 as well. My name is Rudy Reyes. I am the CRA officer for Prosperity Bank. I've been with the bank a little over 2.5 years now, and today I'm here to do a brief presentation on credit reports and scores, and then I believe Tan wanted some Q&A on savings, investments, and so forth, and building that part of your financial plan. I see we have Gracie on. Do you have any specific questions you're looking to get answered today? And I'll make sure I address those.
Hi, good morning. No, but I will be thinking of some throughout your presentation.
Okay. Sounds good. Sounds good. Yeah, it's a small class today, so feel free to chime in and with any questions, and we'll certainly answer those. Or if not, we can come back with an answer to Tan, and she can relay that to you. I'm going to try and share my screen now. Let's see. Are you able to see my screen, Tan?
Correct, we can see it.
Does credit report and scores?
Yes.
Okay, great. So before I get started on the presentation, this is just a reminder that these presentations, this one in particular is 57 pages. I won't go through each one in detail, but it's meant to be an overview and informational session for you to understand how credit fits into your financial profile, and how specifically how credit reports and scores fit in that piece of the puzzle. You definitely want to know and understand that your financial future relies heavily on your financial education, and it's a lifelong process. I know you're in college now and you're probably fed up with education classes after classes, but this is for your best benefit. This is for you to make wise financial decisions that are going to benefit you in the long run. Keep in mind that once you get out of school and get established in the workforce, you will be faced with new obstacles or tasks, so to speak. You'll be buying cars. Your biggest investment, which would be more than likely a home that you ideally will purchase. You'll be making other financial decisions about insurance, about health insurance, about auto, home, life insurance. All these are items to consider in the big financial picture, and credit plays a role in all of these major decisions. So let's get started on the presentation here. So keep in mind, feel free to take this presentation with you to build off it and put it in your encyclopedia of references that you go back to, because it's only going to help you going forward in the future. All right, so what is in a credit report? This is meant to be a Q&A, but essentially, of course, it's going to have your basic personal information. Credit reports do not contain arrest or convictions. It will have your credit card payments. It will not have your exact income or any income data. Bankruptcies, cell phone plan payments, typically those are not in a credit report. Debt to income ratios is not in a credit report. That's the terminology you'll get to when you look to buy a home. Student loan payments, student loans will be on your credit report. Credit card limits, traffic tickets, and fines are not in your credit report. Savings account balances are not in your credit report. Debit card purchases, depends if they're reporting, but not likely since those are not really traditional sources of credit. So your credit report is that it's a report of your credit history. It's a report of your list of obligations that you have with typically financial institutions such as credit cards, student loans, mortgage payments, anything where you have a contractual relationship set up to borrow money and pay it back and pay it on an installment or a revolving basis. So we just covered this. Your identifying information is listed in your credit report. Debts and some bills, public record information. If you ever file for bankruptcy, that's a public record that would be in your credit report. Your applications for new credit and other inquiries. So if you go apply for a credit card, that's going to show up as an inquiry into your credit report, and it will show if you've gone to a Nationals game and you filled out those applications for a credit card so you can get a towel or a blanket. Well, those are going to end up on your credit report as inquiries because it's actually a contractual request for credit from whoever's providing that prize there to go along with the application. Your major credit reporting agencies, Equifax, Experian, TransUnion. You may have heard of some of the newer companies that are coming into the arena, such as Credit Karma. They're boasting more of a reporting more and more. Some of these new organizations you need to be wary of. They may provide you free credit reports, but at the same time, they are also selling your information in as a benefit of receiving that free credit report. Whereas Equifax, Experian, and TransUnion, they are more of the traditional ones that banks will use when they're making decisions on your credit applications. So what is a credit score? It's basically a number based on information in credit reports. It predicts payments of bills and debt as agreed, and people with higher credit scores are likely to present lower risk to creditors. So since this planet is filled with 7 billion people, it's a way for financial institutions to know a little bit about who's applying for credit from their institution and how to assess the risk that are involved with making that credit. And we'll get to credit scores and what goes into those scores a little bit further in the slide presentation. So who uses credit reports and scores? Of course, financial institutions, some landlords, some of your mainstream apartment complexes will pull your credit report to see if you've had any evictions or unpaid lease agreements. Utility companies, a lot of times they'll pull your credit to see if you pay on time and you got a good score. If not, it may require you to make a deposit when you're opening a utility account. Some cell phone companies, insurance companies started pulling credit reports a while back, and it's their way of assessing your responsibility as a consumer. And it's not a direct correlation between your credit report and say your driving record, but if you're not responsible in your credit report, it's an indicator that they could use to assess the risk of, well, does that mean that their driving habits are not going to be as responsible? Employers will pull your credit report, especially in financial institutions, possibly schools. It's an indication of your financial responsibility, especially if you're applying for a position where you are charged with managing funds, money, so forth for the company you're applying with. Some state agencies or affiliated organizations. Risk-based pricing. Essentially all this is saying is the higher the credit score, the less, usually the better terms you will receive on your credit request. If your credit score is low, say it's 500, 520, that's going to be an indicator of a higher risk and will likely not be approved. Uh, in that case, you get adverse action notices, risk-based pricing notices. These are generic notices that are issued at the time of your application, so you understand um, if you didn't qualify, why, and what has gone into the pricing of your credit request. Having no credit reports or scores, if your credit invisible, um, which for the most part, it's been a long time since I met somebody that does not have a credit report. But there's other ways to demonstrate your credit history. Even though you may not be on the credit report, you still may make utility payments. You still may have independent loans with small car lots that don't report to the credit report. Um, those are called non-traditional type credit histories. Payments on auto insurance would be a similar type of proof of your credit history. Those come into play when you're applying for mortgage if you don't have a credit history. And if you are looking to build one, there may be another slide here that addresses that. If you're looking to build a credit history, you want to look at possibly opening a secured credit card with the financial institution, a secured loan. Whenever you're talking to a banker, you always want to ask, do you have a credit starter program or loan product that will help me get my credit started? And if your particular financial institution does not have a starter type program, then ask them for a referral, because I'm sure it's not the first time they've received that question, and maybe they can give you ideas on where to get that credit started. I think 30 years ago, my first credit card came from a gas station. They tend to be a little more flexible. They'll start you off with maybe $100 or $200 credit line, and as you uh, borrow and pay back those credit card payments, they will increase that line, and before you know it, you're off and running with your credit history. And it's important when you start your credit to keep those payments coming in and make those payments on time. That way, you build up good history, not just history that includes slow payments or missed payments. Slide 11 is an exercise. Try it yourself. Do credit reports matter? And you can read through that at your own pace. Same thing with 12. Opting out. There are opt-out methods you can use to get out of what they call pre-screened offers. I would recommend going to the Federal Trade Commission and Google in opting out of credit offers. If your mailbox is full of 100 credit applications, that might be something that'll help you reduce those requests. Key takeaways: your credit history can affect your access to credit, loans, job, housing, insurance, and other important services. Credit scores. I'm going to advance to some of these slides here. This is the slide I like. So these are 5 factors in your general FICO score. FICO is one of the credit scoring models. There's also one out there called Fair Isaac you may have heard about, but essentially this is kind of what your credit score is based on. 10% is going to be looking at your new credit that you take out. Credit mix, which is, okay, do you have credit cards? Do you have student loans? Do you have mortgages? What type of credit have you had in the past, and how long have you been on the credit report with the credit reporting agencies? And that goes into length of credit history, which shows 15%. Payment history, that's a big chunk of your credit score. Of course, it's 35%. because that's a big part of what financial institutions want to know is, okay, do they pay on time, and what's their credit score? You know, typically 680 and above, and it varies from time to time. Those are adjusted, are considered good payment histories. 620 to 680, maybe you had some issues in the past and have cleared up. Below 620 or 600, you may have had some bankruptcies or a lot of slow pays. And there's various reasons for those hiccups in your credit report, um, which may be explainable if you were ever, say, questioned on, why is your credit score where it's at? Um, well, we had this global pandemic and I was out of work for 6 months. I'm back in work, I started working again and have been getting caught up on my payments and so forth. So there may be opportunities to explain away, bad periods in your payment history. So keep that in mind if you're given that opportunity. And amounts owed. So say you've been on the credit reporting agency for 4 or 5 years, you've had a car loan and a couple credit card accounts that are opened up. So altogether, say the car is 10,000 and the credit cards combined, your limits are 10,000, so that's 20,000. And how much of that credit that has been advanced to you is still outstanding? How much do you still owe? So if you owe 10,000 out of that $20,000 limit, that's going to factor in to your credit score. And of course, the less that you owe, the more beneficial it's going to be to increase your credit score. Now, if your limits are 20,000 and you owe 20,000, that shows a behavior of you're using credit excessively. You don't have any limit left. Ordering your credit report. So you can have an opportunity to get a free copy of your credit report if you're turned down for credit. You definitely want to get a copy, whether or not you're responding to a decline on your credit report, just to know what's in there, just so you won't have any surprises when you are applying for credit. What is considered a good credit score? 800 to 850 is exceptional, very good. 740, 799, and so forth, going down the list. Poor 300 to 579. So I'd say the national average is probably somewhere between 670 and 720. Um, the 800 to 850, you usually will see those with older folks who have been through the credit system for a long time. Their credit history is well established. They have a couple mortgages that they've taken out and paid off, several car loans. Everything's paid off on time. You're going to see very little late pays on that type of credit score, if any, just for example purposes. Key takeaways: you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. Getting and understanding your credit reports and scores. So once per year from each credit reporting agency, you're allowed to get a free copy of your credit report. Let me see if that website is in here. Annualcreditreport.com is a website where you can go and fill out their request for your credit report. Of course, they will ask for identifying information such as your name, date of birth, social security, but they will also ask you more technical questions, which only you should be able to answer based on what's in your credit report. So say you had a car loan with Toyota, they will ask you a question. In the last 5 years, have you had a car loan with A, General Motors, B, Ford, C, Toyota, D, none of the above? So that helps to weed out those that are trying to steal your identity and get a copy of your credit report for further malicious activity. So if you can answer those questions effectively, you will be able to access your credit report online. If you have issues answering those questions, you can still request one by mail. and it will be provided to you at no charge. Watch out for imposters. Others that advertise free credit reports or scores are not part of legally mandated free annual credit report program. Often free services convert to ones you have to pay for after the trial period. So that's what we talked about earlier, such as Credit Karma. There may be a catch to why you're getting that credit report for free. Right to additional free credit reports if you receive public assistance, if you're unemployed, victim of identity theft. State law provides for a free credit report. If you're denied credit, service, an apartment, or employment, you're entitled to a free copy of your credit report. What sections are in the credit report? Your personal identifying information, any public records, such as bankruptcies, accounts assigned or sold, credit accounts, and inquiries. Getting your credit scores. Some nonprofits will help you work to get copies of your credit report and credit scores. Most banks, or a lot of banks and credit card companies now offer free service for you to get a copy of your credit score and sometimes your full report. I know I'm with some of my accounts are with Chase, and they do offer that free service to get a copy of your credit score and also look at what's in your credit report. And I want to say Discover Card has that opportunity as well. So free plugs for those banks. Remember the key takeaways: get and review your credit report at least once every 12 months to make sure the information is accurate. You want to make sure, number one, that your payment history is showing clean if you've been paying your bills on time, and you want to make sure no one's using your credit, and everything is reporting accurately. And a lot of times they also have the addresses that you lived at prior, and you want to make sure that that information is correct. And sometimes they have employment information that you need to make sure that that is correct as well and reflective of your history. If not, you can ask that it be removed or disputed. And a lot of times when you get your credit report online, they give you that opportunity to dispute it electronically right then and there. And section 4 is talking about disputing errors in your credit report. Find errors on your report, file a dispute right away, and be sure to follow up and make sure that your credit report has been cleared of that dispute if it's in fact in your favor. Errors on your credit report could consist of identity errors, incorrect reporting of account status, data management errors, balance errors, outdated information. We see it a lot when there's juniors and seniors in a family where you may have some mixed data going on, or possibly junior is stealing senior's information without them knowing it. So keep that in mind. Time limits on negative information generally can only be reported on credit reports for 7 years. Some bankruptcies are an exception, where they will be outstanding for at least 10 years. No time limits for negative information for someone that applies for a job with a yearly salary of $75,000 or more than $150,000 worth of credit, life insurance with a face value of $150,000 or more. 7-year reporting period. This can be confusing. Generally starts 180 days after you have stopped paying on the debt. And here's an example of how to calculate that time frame. You know, if you had some negative information, maybe a smart charge off or collection that it's been stale on your credit report, 7, 8, you know, coming on close to that 7th year, that's something you want to monitor and see if it drops off once you've hit that 7-year mark. I'm not encouraging you to not pay it. Ideally, you want to address it if it's something you can manage and take care of. But at the same time, if it's negative information, look for it to drop off around that 7th year to make sure that you move forward with a clean slate. Medical debt generally is not on credit reports until unpaid for at least 180 days, which of course gives you time to resolve billing disputes, make payments, or make payment arrangements. Um, Medical reporting has always been an issue on credit reports. It's just sometimes the due diligence on the behalf of the biller is not as good as you typically see from the financial institutions. So they will oftentimes have a lot of errors on what they're reporting. So keep an eye out for anything medical that may have been either taken care of by the insurance company and you assumed it was done, and then all of a sudden it shows up as collection on your credit report. Another reason you get a free copy at least once a year. Now, dispute errors, you can dispute them online or by mail. When you go to annual credit report, if you are looking to dispute an item there, it will also have instructions. And when you go through that dispute process, you want to make sure that you provide your identifying information, a clear description of the item you are disputing, and the reason for each dispute, any request for correction or removal. And you also want to have backups of any type of documentation that supports your dispute. You know, if it's a payment that they say you missed and you have a copy of a check that shows you made it, well, that's going to satisfy that dispute and should be removed from your credit report. And of course, after you file your dispute, you want to follow up and make sure it's in your credit report, and of course, retain copies of that dispute just in case it's reported by one of the other agencies, so you can make sure that they clean it up as well. Nowadays, they're starting to communicate with each other, and if you dispute with one, they will typically ensure that it's cleared with the other two credit reporting agencies, but you always want to follow up and make sure that you're showing a clean report on all three credit reporting agencies. Typically, or sometimes, a financial institution may only pull one of the three credit bureaus, and in that case, if it's not cleared from a dispute from another credit bureau, then you'll need to work on that to make sure they're all reporting similarly. Key takeaways: if you find errors on your credit report, file the dispute right away and be sure to keep records and follow up. Building, repair, and maintain a productive credit history. Your credit history does not have to be your credit future. So life happens throughout life. You know, right now you're in school, so as you're probably accumulating debt to until you get to full-time employment. So your credit report may be reflecting a high level of debt or maybe some slow pays, but that does not have to dictate what your future is going to look like. So once you get employed, get caught up on your bills, you pay down the balances, you're more than looking at increasing your credit reporting score, which is only going to be beneficial when you go to apply for credit to get better interest rates, you get better rates on your auto insurance, and to get approvals. Yeah, and this is pretty much, we covered this on the other slides, but essentially get and review your credit reports, dispute and correct any errors, pay all your bills on time as agreed, use as little of your credit limit as possible, use credit building strategies, keep old accounts open if you can, apply for credit only if you need it, negotiate different terms, and ask for a goodwill deletion. So you'll hear a lot of talk about, well, you shouldn't use credit at all, but there are times when you need to use it. You have to use it. We don't carry around $20,000-$30,000 for buying a new car these days. You're always going to more than likely not be able to pay cash for purchasing a home, but responsibly you can. Once you get in the habit of managing your debts and finances, you can, use a credit card to just build up points and use those points to your advantage. Just make sure you pay off that balance, in the next month, or maybe set up a standard where you pay it off in 60 days and you reap the benefits of those reward points. That's a strategy that's only going to benefit you, not just the fact that you have you continue to build your credit history, but you're also building up these points that you can use for merchandise or travel or so forth. And then also keep in mind too, with some credit cards, you also have an extra layer of protection when you want to dispute a transaction, or you want to sometimes they will double the warranties that you receive if you use the card to purchase the item. So that would be in your credit card agreement, which used to be a 3 or 4 folded agreement that they send you in the mail. Nowadays, I'm sure they've got a lot of those online. So make sure you read those agreements. There are a lot of good benefits for you when you take out a credit card, and you want to make sure you're taking advantage of those when it's in your best interest. We talked about building alternative credit histories, repairing and improve your credit history. See here, build alternative credit histories with rent, childcare, cell phone bills, so forth. Loans from friend or family members. You know, when you're looking at alternative credit history, this again goes back to a lot of times I personally have seen in my experience in banking, there will be some folks who don't have a standard credit report, and they use these alternative sources of credit that you see on your screen for showing the mortgage company that, hey, you know, I do pay my bills on time. You can check these sources here and get letters from those sources, which will support your claim and support your credit history for that transaction. Building credit, you can use a secure credit card, a credit building loan, become an authorized user on an account. If your parent has credit, for example, they can add you as an authorized user, and most times they will cross-report that onto your credit report, and you will get your credit history established. You can get a cosigner. You can apply for a credit card at a store or gas station, make a large down payment, and negotiate a loan for the balance. Maintaining credit, we talked about how do we maintain our credit. Essentially, we're paying our bills on time. We're not accumulating too much debt, and we're disputing any errors that are out there. Get help. Where can you get help? You can always talk to your financial institutions, talk to your bankers. If you have any questions, feel free to pose those questions. Most bankers are constantly receiving training and retraining, and you know, as they grow their career in the banking industry, they become very knowledgeable about finances and how they affect you personally. So they're always good sources for Q&A. Housing counseling agencies approved by the Department of Housing and Urban Development. HUD approved housing counseling agencies. I am actually part of the Credit Coalition in Houston, which is a HUD approved housing counseling agency, and also a free source of financial education. And it is a nonprofit. Certified financial planners, anybody that's likely got a accounting degree, they're usually good sources for understanding finances and credit. Credit repair companies, just be wary that essentially all they are going to do is go through the dispute process on your behalf and charge you a fee to do so. You can do it yourself. It's really a personal choice if you want to essentially pay someone to do that work for you. Same thing with debt consolidation businesses. They offer different services and also specialize in debt consolidation loans and debt settlement services. These are things that you can try and work out yourself instead of spending additional money. If you're working on consolidating your debt, I would talk to your financial institution and see if you can negotiate longer terms to pay back your debt or consolidate multiple loans with the same creditor. Talk to them directly before you look at these sources here, which likely will cost you money. And this is essentially what we just talked about. credit repair scams, same process or same concept. They typically want you to pay up front. They promise you, your ability to buy a house after you've gone through their program. These are essentially companies that are, if they're legit, they're going to dispute items to help clear off your credit and build your credit history. But it's the same thing. You can do these processes yourself, save that money, and know that it's handled properly. Protecting your credit, there's what they call fraud alerts, initial fraud alert, active duty military alerts, extended fraud alerts, credit freeze, and credit locks. Um, if you ever feel you're in a position where they have um, stolen your credit or it's been used fraudulently, you can file these alerts with the credit reporting agencies, and they will stay on your credit report for a period of 90 to 120 days to 180 days, just depending on what type of alert. So if someone pulls your credit and you've been a victim of identity theft, this fraud alert will show up, and that's going to prompt uh, that financial institution that pulled that credit to take a further step to verify your identity to make sure it's you. Key takeaways: your credit history does not have to be your credit future. And take action. So, what are you going to do? How will you do it? And how will you share your plans with anyone? And if so, who? So, like I said, this is meant to be a really brief overview of the credit process. And I strongly encourage you to continue your education and building your knowledge on managing your credit history. So before I go on to savings and investment topics, are there any questions outstanding?
So I think I have a question or two, if that's okay. You hit a lot of stuff, Rudy. This is like, what's your Cash App so we can, this is some high quality content.
Thank you. I try to keep it high quality. They recently voted me as president of the Credit Coalition, so this is good practice for me to build my knowledge and continue to impact people with good, solid, correct information, which a lot of it comes directly from our financial regulators who make a lot of efforts and strides
Right.
to make sure that information is accurate and impactful.
This is awesome. So I guess in just general terms, could you talk about like annual fees, maintaining proper balances? And I know you talked about it a little bit, uh, cash advance and check writing things. You did talk about going over your credit limit, finance charges, grace periods, maybe interest rates, late payments, going over your limit. Like, how does that affect your credit?
Well, ideally, you want to avoid making late payments. Um, and it's a matter of understanding your full financial picture. You know, I'd strongly encourage that you have a written budget. You need to know what's coming in and out of your pocket every month, and you can drill down as far as you need to um, help you get to your financial goals there. So, if you've got a credit card with a balance of $1,000 and you want to pay that off uh, in a year's time, well, 1,000 divided by 12 is going to be roughly, 88, $90 a month, depending on your interest rate, maybe $100 a month. Um, but keep that goal in mind, because if you don't and you don't write it down, life gets complicated. As you graduate and you get into um, more adult um, environment of being a grown up, you're living on your own now. You've got food expense, you've got entertainment expense, you've got utilities, you've got car payments, you've got miscellaneous stuff you're buying, Netflix, you're buying Starbucks every day. So all at the end of the day, how much are you spending, and what's your what is it costing you to live per day? So you really want to get a grasp on these concepts, and the best way to do that is to write it down, use an Excel spreadsheet, whatever helps you manage those expenses on a monthly basis, because then that's going to prevent you from, or at least help you uh, from having a late payment, which um, will hurt you on your credit score, and you don't want to do that, because the lower your credit score, typically the higher the interest rates you're paying for stuff such as car loans or credit cards and so forth. The average probably interest rate on credit cards is anywhere from 12 to 18%. Reason being is those are unsecured credits. And whenever you borrow unsecured money, there's a lot more risk. If you default, then the financial institution is left holding the bag. And essentially, they have made that credit to you based on your name and your credit history. And so it's harder to collect. And that interest rate offsets the cost of those collection efforts as a whole, when they're dealing with a portfolio of, hundreds of thousands of credit cards that they're managing. Um, when you get into more secured credit, such as auto loans and home loans, you will see that those interest rates are a lot less. I think your typical home loan is around 3 to 4% these days, maybe even cheaper, just because the interest rates are less that our banks are being able to offer. Auto loans may be a little bit higher, maybe 4 to 6%, and all that's going to depend on your credit history. But they're a little bit safer credit vehicles because they're secured. So if you don't pay your auto loan or you don't pay your home, what's going to happen? They're going to repossess. If you don't pay your lease agreement, what's going to happen? They're going to evict you. So there's always going to be consequences for not paying on time and not paying at all. Keep that in mind. It's you can avoid late pays. Definitely avoid them. I think most late pays these days run anywhere from $30 to $40. Man, that's a payment right then and there that you could apply towards your principal balance. There may be other provisions in your credit agreement that if you're late more than once or twice, you may be looking at suspension of your account, suspension of your credit limit, lowering of your credit limit. Um, Worst thing you want is a snowball of late payments, which are only going to be added to the total amount that you owe. So if you're owe $1,000 and you're late, then now you owe $1,040. If you're late again, now you owe $1,080. Now keep in mind, mistakes happen. Basic oversight. You missed a payment. If it's your first time, pick up the phone, call your creditor, call your credit card, and ask them if they can remove that late pay. It was an oversight. You won't do it again. A lot of times they will give you a break for the first offense and waive that late fee. That late fee is $30-40, and it takes you 5-10 minutes to request it removed. Well, that's just $30-40 you made in 5 to 10 minutes. Keep that in mind. Did I miss anything on your question there? I kind of.
No, you answered it in depth as usual.
All right.
Another question that I would ask is, and we can wait for the investments to the later one. Is reading the fine print really that important when opening credit cards or bank accounts or looking at credit reports? Is there a difference between paying the minimum on your credit versus like paying a little extra? Does that really actually help? And that includes with like a mortgage too, like that's still a part of your credit. Does that really help? And is there really like a, quote unquote secret number for credit cards that you should have? Is there like a minimum? Is there a maximum? I often hear, well, you should have different types of credit. And I think you addressed it a little bit, but I always hear like, well, you should have a credit card, you should have a bank card, you should have like a debit card. It's confusing. And so for people that are really looking to work on, build, or even rebuild their credit, should they read the fine print? I feel like, like most consumers, I just be like, yeah, sign me up. Is it really that important?
It's painstaking to read that fine print. But I do encourage you to at least glance through it, understand what you're agreeing to, because at the end of the day, when you take out a credit card, when you take out a loan, you're bounded by that fine print. That's your contract. That's what you're agreeing to. And for the most part, if you read one agreement from one bank to the next, they're going to start looking alike, and you will become more familiar with the terminology, with the knowledge, with the provisions of that credit agreement. If you're such as late pay, if you're more than 15 days past your due date, you're considered late and you're assessed a $35 late fee. So all that is spelled out in your agreement. Everything is itemized, by I'm sure well-paid attorneys to write that tiny small print. But regardless, it's still contractual obligation, whether it's a handwritten agreement between me and you to borrow $1,000 and pay you back in 6 months and pay you a lump sum of $1,050 for borrowing that money. If it's written out and I signed it and you signed it and we agreed to it, that's a contract. So it's the same concept with financial institutions. Anything you sign, you're bounded by that agreement to fulfill your part of the contract. And so I do highly recommend you at least, go to your favorite coffee shop and get a strong dose of caffeine and, spend 30, 40 minutes perusing through your contracts to figure out what you just signed up for. And sometimes you may be surprised what's in there, and sometimes there's benefits that you don't know about. But yeah, I definitely strongly encourage that you look at the fine print and at least understand that, from one credit card, from Chase, from Bank of America, from Wells Fargo, from Prosperity Bank, there's going to be similar language. And once you understand how the card works and how the interest is accrued and charged based on your outstanding balance, it will essentially help you manage your credit situation even better, because it's just another feather in your cap that you can build on your knowledge to further your situation. Now, in regards to minimum accounts to have open, um, I don't encourage you to take on credit, but given this day and age, you do want to have a couple of accounts that help demonstrate your credit history, that you pay your bills on time. Now, you don't have to carry balances. You can certainly pay those off, as you charge them. But they will still be reporting to the credit reporting agency, showing that you have been approved. You have a credit limit. You have a average balance of, $20, $50. Uh, and when you go to apply for a mortgage, that's going to be important because they want to know that it helps them make their decision in terms of whether or not you're going to be a responsible payer on your mortgage. So those initial credit card accounts will help you build that credit history. Our car loans, our student loans, anything that's reporting to your credit reporting agency is going to help you build your credit score. Um, and of course, essentially, if you're borrowing money, your ideal goal is to pay it off as quick as possible. There's an old adage about being slave to the debtor, and to some degree, that's a true statement. The more you owe, the more you're going to feel indebted and a slave to paying back that debt. Until it's gone, and once it's gone, you're free. So that's a nice feeling to be able to pay something off, and the best way to get to that point of paying your bills off and becoming free from debt is to manage your entire financial picture, your your written budgets, your what are your short-term goals, what are your long-term goals, you know, and how do they impact your financial future there. So everybody's situation is different. There's no magic formula there. The keys is to what's your financial picture look like? What's your income? What are your expenses? Where do you want to be at in 10 years? Do you want to own a home? Do you want to buy rental property? Do you want to get into investments such as the stock market, or do you want to retire at 50, 60, 70? You know, how is your Social Security going to impact your retirement? How much did you save? Well, all that's going to depend on what type of lifestyle you want to live as well. A lot of factors go into those questions there that it's really an individual choice on where you want to be at and what you have to work with in terms of finances. And once again, I go off on a tangent, but let me know if that answers your question.
No, it definitely does. You're so good at this. So we are out of time. Rudy, you are amazing. Like, seriously, you did a phenomenal job today. Gracie, I went ahead and put the survey link in the chat. Go ahead and fill that out so you get credit for it. I would have to say this is probably, no bias, I mean, a little bit, but probably one of the best, I would say, workshops that we've had. You did a really fantastic job. Like, the information was so smooth and so helpful. Gracie, did you have any
Well,
questions? I saw you hop on the mic, girl. Go ahead, hop on.
Yes, I just wanted to ask a quick question.
sure.
So I did got a car loan and I was thinking of refinance it. But I know it dropped whenever I got it to my credit, it dropped about 30 points. So it's a better before I refinance to be over, like make it go up again.
Well, it depends how long you've had the car loan. If you just took it out, um, and also depends on what the rest of your credit picture looks like. You know, if you're at say 750 on your credit score and it dropped you to 720, you still shouldn't have a problem to get that car loan refinance. I would start with getting a copy of your credit report and at least know where your credit score is, and make sure that the payment is comfortable and fits in your budget. And then start talking to some of the well-known or popular auto refinance options out there, and a lot of them are credit unions. If you're part of a
Okay.
credit union, get in contact with them and, hey, I just bought this car. They're charging me 10% on rate. I think it's a little high. I think my credit score is good. What are your options for refinancing this so I can lower my payment, so I can lower my interest rate, and that's only going to benefit you. If you're paying 10% and you can drop it to 5%, well, that's, say, on $10,000, that's going to be a significant change in your monthly payment. That's frees up that money to go elsewhere. So definitely worth looking at. Find out what your credit picture looks like. So when you're talking with these credit unions or other sources of refinancing an auto, well, what are your underwriting guidelines? Underwriting is essentially what's your credit score? Do you have a debt to income maximum ratio, which is essentially, what are your total outstanding monthly payments showing on your credit reports versus your gross monthly income? And then also, when you buy a car, understand that a car is a depreciating asset. So the minute you drive it off, if you paid 20,000 for it, it may be worth 18,000.
Yes.
Because as you put miles on it, as you add wear and tear, that vehicle depreciates pretty quickly. So keep that in mind. Sometimes they will, if you didn't overpay for the vehicle, they will, pay off what you owe. And it all goes back to making that contact with the financial institution you want to work with, and see what your options are. And then also you want to know what kind of fees, because sometimes they will say, well, we can refinance you, but we do have a one-time fee of $100 or $150, which we can roll into the loan amount. But make sure there are any fees involved. You will have registration and title change fees, because they have to change the lien holder on the title work, which usually runs $75 to $100. So get an assessment of fees. How big a change of interest rate are you going to get from that change in the auto refinance, and then compare it to what you're paying now. If it's only going to save you $5 a month, then maybe maybe money better spent or efforts better spent elsewhere. If it's going to save you $7,500 a month, well, that's $1,200 a year. That's worth it to me. So keep those in mind when you're talking out there.
Okay, thank you. Great information to know.
Good, thank you.
Well, I think we're all out of time.
Okay.
You are amazing. We will see you at the 1 o'clock.
All right, we'll see you then. Thanks for having me on.
Thank you too, Gracie. Go ahead and click that link and fill out the survey, and we are good to go.